Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the SPY for April 28th, 2025, and the data sets and the earnings for this week as well. And with that said, let's go ahead and jump straight to the data, and I will follow with the earnings after. Let me go ahead and swap my screen, make sure it's on. There we go. All right. So Monday, as you can see, there's no data. Tomorrow, no data at all. So that's kind of weird. Not something I'm used to at all. Uh, Tuesday. Tuesday we have the JOLTS data at 10 a.m. If I can actually get to the right. Yeah. Okay. Sorry, I'm off kilter right now. Anyway, 10 a.m. is the JOLTS data, followed by the consumer confidence data at again 10 a.m. And then at 10:30 we have the Atlanta GDP. So any one of these data sets can be pretty big on the market. The consumer confidence right now is pretty big because it can the narrative right now is really consumer based, is really like consumer driven based, and consumers have been slowing down quite significantly. So a major cool or hot reading in that can be pretty detrimental to the market. Now on Wednesday we have the GDP data at 8:30 in the morning. That's going to be very key for the market. The market's very in line with where the GDP is headed right now. At 10 o'clock, also 9:45, we have the Chicago PMI, but at 10 we have some PCE data. Um, that's going to be fairly important. Again, it can sway the market, but I don't think the market's so inclined to the PCE as much, but I could be wrong about that. We'll see though, but most likely it's the GDP that's going to drive the action for the day. The personal spending could do that, uh, just because that's going hand in hand with kind of the consumer data. Now, Thursday we have the jobless claims followed by some of the ISM PMI data. Nothing too important Thursday. Um, some of these data can sway the market, but usually it requires like a really cool print or a really hot print. So far, none of the data this week is going to sway things too much, other than the GDP and the PCE on Wednesday. Friday, however, is a really important day because we have the NFP data, the non-farm payroll. I will pretty much always refer to it as the NFPs. So we have the NFPs, and then we have the unemployment rate, participation rate, things like that. Big deal. That's going to be very big for the market. Other than that, we don't have any other data for the rest of the day. We have these minor data sets, but these don't move the market at all. The factory orders really won't do that either. Everything's going to be basically on the NFPs and the unemployment rate. So that's for the data this week. Now, we do actually have some pretty decent earnings, so let's go ahead and swap the camera. All right, make sure it's on screen properly. Okay, Monday, we have NXPI in the after hours. Now, I'm not going to be trading it, but this is a fairly important one for tech. Let me get my notes. Sorry, I have my notes on a envelope tonight instead of my normal notepad. Now, on Tuesday, we have a bunch of earnings here, but I'm really not focused on any of them. The only two I might play, which that's a big might, is Starbucks and First Solar, just because I've played them before and I'm, confident with Starbucks. It's pretty easy to play Starbucks actually, so um, that one might be fun. Cheap contracts, moves pretty well. Now, Wednesday, really big day. Not so much in the morning, but in the after hours, we have Microsoft, Meta, We have Robinhood, we have Qualcomm. Pretty huge day. It's not the biggest day, but it definitely has, you know, the number one leading company, followed by, another Mag 7 and another major tech. So whatever happens on that Wednesday evening is going to carry over for Thursday. Now, Thursday morning, we have Ellie Lilly. I know many play that, and I do too lately, so I'm interested in that one. Later in the after hours, we have Amazon and Apple, and also Master as well. So those are the three that I'm looking for in the after hours, but again, this is going to be another really huge tech day, and whatever happens in the after hours on Thursday is going to carry over for Friday. Now, Friday, we really don't have anything I'm excited about. We have some of the gas companies. Uh, Usually I play Zom, however you want to say it, Exxon, but I'm not going to be playing oil right now. So that's the data and the earnings for this week. Nothing too special, but it is going to be a pretty action-packed week later in the week, especially the Wednesday, Thursday, Friday. I'm really looking towards the Thursday and Friday because that's kind of when like all the major earnings hit. Like all the major Wednesday earnings are going to reflect in the market on Thursday, and then all the major Thursday earnings are going to reflect on Friday. And then Thursday and Friday we have decent data sets. Wednesday has some pretty big data sets, but mainly it's going to be that Friday. So Friday is going to be the really big day. Um, with tomorrow not having any data, and having kind of negligible data or earnings, we can kind of expect to pull back to support again. So I'll discuss that in one moment. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting into the technical analysis, as always, let's open up the daily chart. And let's turn on the moving averages and the Bollinger Bands. And I'm going to go over all the levels even though we're kind of in between. Uh, yeah, we're in between a lot of the important levels right now, but I am going to go over everything just because it's the weekly video. And starting from the top, we have the upper Bollinger at 573.70. Really important level that's pulling downward towards the 570 range. And what do we conveniently have at the 570? We have the 200 mile. So the 200 mile is at 570.10 right now. So those are consolidating, and that's creating a target for the upside. I'm just going to put a little arrow here to kind of show that. Hopefully it could be a little larger than that, but ignore that box right now. But that's kind of the upside target is towards that 570 range, and that's starting to form here. Okay. Now the 5 mo, which is underneath us right now, is at 534.78, and because the market closed at 550.64, the 5 mo will open tomorrow very likely at the 538, 539 range, give or take. It could be a little higher, it could be a little lower. It really depends on where the overnight and the pre-market opens. The 10 mo is at 533.66. So the 5 mile is pulling above that. It's pulling above the 20 mile finally. The 20 mile is at 534.66, so just $1 above the 10 mile. So we're going to see the 10 mile start pulling above that 20 mile level as well. And for a bullish thesis, that's kind of what you're looking for. You're looking for the 5 mile to be on top of the 10 mile and the 10 mile to be on top of the 20 mile. So this is starting to consolidate and position to potentially start heading upward in a major way. Now, and let's see, let's go over the last one, the lower Bollinger, forgot that. So the lower Bollinger's at 495, 62. So it's above this bottom selling range, but that doesn't mean it's out of that selling range yet. So our downer range is quite a ways away compared to our upside. So if you were just to kind of like put a straddle on this area, potentially the downside has more room right now. Um, just based on where everything is currently with the moving averages and the Bollinger Bands. Sorry, I'm extremely exhausted. I've had a crazy weekend. Um, anyway, getting into the technical analysis part. So we have this massive inverse cup. I did not mean to draw a line. I meant to draw with the drawing tool. Maybe I can actually draw a good cup for once. And I whiffed it. Okay. Did decent. Okay, so here's our main inverse cup, and technically it does go down to here. Um, I'm just gonna correct that really quick just so that there's no misconceptions about it. And now my good cup is ruined, but it's okay. So we have this large inverse cup. Okay. And from this inverse cup so far, we have built somewhat of a bullish structure. But with the structure so far, what we kind of have to watch out for is what I've been talking about for a few weeks now, and this is this inverse cup. Okay, or this inverse cup's handle. No, all my drawings are moving. Okay, so the cup formed. Now we're starting to see this handle form. And I talked about this last week where, yeah, I believe it was back in this area where essentially there's going to be a decision being made for the market here where we either close upward or we start heading back downward and we fill out this downward cup. Now, as of last week, we have broken out of that, but it doesn't mean this selling structure is done with yet, because this can turn into a head and shoulders, and I can show that here in 1 second. But this upside here has now shrunk a lot. Okay, so the downside has technically increased significantly, while the upside has shrunk. So kind of in the other example I showed as well, um, because we have this bullish cup right here, and that's why I'm saying the upside is shrinking. Because if I wish it took that whole candle, if bulls want to break out of this structure, they need to fill out this cup. Okay, and that needs to be filled out on the daily chart, but that's all the way up to the 577 range. Okay, we do have some good bullish structure here. We have, a double bottom right here. We don't really have an inverse like head and shoulders or anything, but this double bottom is good. And so far, if they do take the rest of that cup, the rest of this range right here, it will be, a really strong cup. But what we do have to look out for is the downside. And I'm going to highlight here. Highlight that in a second. Sorry, I just want to change some of the colors on these because it makes it just a little bit easier to visually see. And just so, any of my colorblind viewers, the inverse cup, the bear structure is the purple. So if I'm talking about the purple, it's the bear structure. Bull structures I keep as yellow. So the purple we have as the bear structure. Now, so far, we actually do have a head and shoulders building here. Okay, and a head and shoulders is a bearish structure. It leads to selling. And I just want to highlight this. Sorry, it's taking a little while, but I just really want to make this visual as possible. But what's starting to form here is a head and shoulders. So if we start to see this area break down, which potentially in the overnight we're seeing that happen, but not in a super convincing way yet. Potentially we could see this break down, and I'm not saying it's going to break all the way down to the 511, but it could. And potentially we see it head back up, build that right shoulder out, and then pull all the way down back to that 481 range. So that would be the bearish thesis right there. And I do want to make these purple. Gonna try to do this in my videos from now on, but we will see. I just know in the Sunday video I wanted this to be extremely, extremely apparent. So, as you can see, very different structures going on right here. The bulls need to build more structure here, and if they are going to have this breakout, like I said, they need to finish this cup out. That's the primary thing that the bulls need to focus on. And that's quite a ways away still. It doesn't look like a lot, just due to how large the moves have been. But this is still like a $30 range. Okay, that's still quite a bit. This could be a week or two of having to build support upward towards that range to really get that breakout on the cup. So it may not look exactly like this. It may, chop in this area and then pull upward. But that's what I would be looking for as a bull to start wanting to claim that area and building some quality structure to do that, especially on the micro chart, and I'll show that here in a minute. But as a bear, what I'm looking for is essentially we have this really nice inverse cup built here, and we just need this handle to finish out. As long as the bulls do not continue this upward, then we have plenty of time to pull this downward. The 200 mall is at the 570 range, so unless there's going to be a $30 move upward in the very near term, time's kind of on our side to pull liquidity downward. So that's kind of what I'm looking for is seeing this pull downward towards this bottom channel. And at the bottom of this channel, if we do get there, right, that's when you really load up equities again. That's when you load up calls and everything else, because out of that usually comes a handle. Okay, so that's kind of the thesis right now on both the upside and the downside. And again, this is the daily chart, so this is going to take a whole week just to do, this range in there. Just to do that, the rest of the structure right here is going to take, the rest of the week to 2 weeks. So let's look on the hourly chart, okay? And a lot of these candles and everything are going to look wonky, so I might just not show them for a moment. Just hide them. Okay, so on the bullish side, we have, I really wish this won't show like this, but it's going to, and I apologize. So let's go ahead and delete just a bunch of these, even though I really didn't want to, but I will, just because I want to show this better. And deleting those lines, and I'm going to delete this cup, and I'm going to delete whatever that is, delete that, and delete that. Okay, now we only have the bear structure showing. So, bulls did really good. Okay, the bulls formed this cup. Okay, out of that cup, they pulled down and formed a handle. And out of that handle and nested cup, they formed another handle. Okay, this is a super bullish structure. This is suggesting, an upward breakout. Okay, heavily suggesting that. If we don't get that upward breakout, I'd be surprised, just because of how structured this is. However, as I mentioned a little bit earlier, this potentially can be a pretty gnarly head and shoulders. And while that was on the daily chart, we do have a smaller one building here as well. And technically this can be building for a bullish structure too, as this cup can be larger than what it appears. So instead of it finishing right there, this area right here could still be a part of the cup. Okay, instead of it being like an additional handle. So if that's the case, if that's the cup right there, then we can still expect to form some sort of handle. Now, I only drew it right there for a reason. Uh, if this plays out this way, this is kind of the make it or break it area, because this is going to decide if the bulls head upward and finish out that cup, or if that doesn't happen, and if it turns into just a pure rejection and forms the right shoulder instead, and heads downward. Okay, so hopefully that's going to be simple enough. I'm going to talk about a couple price targets really quick just to make things really easy. And I'm just going to hide everything for a moment. Now, assuming that the 5 mile is going to open tomorrow at the 538 to 539 range, that means that the upper bounds of the 5 mile, and when I mean upper bounds, that's kind of like the upper range of the test level. So when I talk about testing a moving average, generally it's going to test $1 to $2 both above and below. So if the 5 mile is opening within the 538 to 539 range, then we can expect the upper bounds to be in that 541, 542-ish range, give or take. So if we see the overnight still pulling down, if we see the pre-market pulling downward into that upper, 542 range, then potentially we could have a full 5 mile test, which could pull downward all the way down to the 536 range, which that seems kind of drastic, but due to how large these moves have been, that would still be within the bounds of the lower bounds of the 5 mile, because it would still be within that $1 to $2 range. And as we pull downward, the 5 mile moves downward pretty aggressively with us. So there's a lot of room for both bullish structure and bearish structure in here. What I'm personally going to be doing is I'm going to be waiting for the 5 mile test to happen, which that will happen this week because the 5 mile is tested every 5 days. It's generally tested once a week. So I'm putting my money that we are going to be testing the 5 mile this week. Once we get to the upper bounds of the 5 mile test, I will be opening puts for probably about 2 weeks to a month out. I wouldn't suggest any shorter than that, but I would suggest 2 to 4 weeks. That's personally what I'll be taking. And I will take some short-term calls, probably only about 2 to 3 days out. And I will ride both the long-term puts and short-term calls down towards the lower bounds of the 5 mile test. And at the lower bounds of the 5 mile test, I will then cut the short-term calls, take a loss on that, open up long duration calls, so the 2 to 4 weeks out. And this way we have really strong straddles that have profit held in between them, and both sides are going to be pretty much in the money. So that's the plan for this week. If we get a 20 mile test, I'll be doing the same thing with the 20 mile, but I'm not going to be doing any like overnight swings. I will be doing some scalps in between just the midday session, but I'm not going to be going too crazy on loading shares or anything at this point. We do need to pull down and retest support, so that's kind of where I'm expecting things to head this week. Whether it's a slow consolidated support test or if we just start really ramping up and heading downward, we'll see. But I'm expecting the support to be tested. So anyway, I'm going to end the video there. If you have any questions, go ahead and post them in the comments below and I'd be happy to answer. I hope everyone has a great week, trade safely, and I will talk to you in the next video. Thanks for watching.